Welcome to Living Your Wealth Today and Tomorrow, the show where we explore how to enjoy the wealth you've already built, as well as how to best plan for a successful financial future. I'm your host, Kelly Ennis, founder and president of Infinity Financial Strategies. Welcome to episode 1 of Living Your Wealth Today and Tomorrow. I'm your host, Kelly Ennis, a financial advisor dedicated to helping you make sense of what matters in your financial life. Today, we're diving into one of the most significant tax overhauls in recent history, the One Big Beautiful Bill Act, or OBBBA, signed into law on July 4th of 2025. This landmark legislation extends many provisions of the Tax Cuts and Jobs Act of 2017 while introducing several new deductions and planning opportunities. Whether you're an individual taxpayer, retiree, small business owner, or planning for your family's future, there's something in this law that may affect you. Let's walk through the highlights and the planning implications. One aspect of this bill to note right away is that it will make tax returns and tax planning more complex for most people, due to changes in credits and deductions and their phase-out ranges, as well as the widening of the gap between ordinary income tax brackets and the capital gains tax brackets. Tax projections won't be as simple as they were. And it's important to note that these features of this tax bill all have differing effective dates and expiration dates. So let's start with individual tax rates and deductions. First, OBBBA locks in the current individual tax brackets, 10%, 12, 22, 24, 32, 35, and 37%, making permanent what was scheduled to expire after 2025. There's a minor adjustment to the lower brackets starting in 2026 to account for inflation, and that will slightly lower the effective tax rates for many households. The standard deduction also increases. $15,750 for singles, $23,625 for heads of household, and $31,500 for joint filers. For seniors age 65 and older, there's a new temporary deduction of $6,000 per person or $12,000 for couples, effective only from 2025 through 2028. However, it phases out for higher earners, and interestingly, it does not reduce adjusted gross income, which affects how Social Security and other tax benefits are calculated. OBBBA does not eliminate taxes on Social Security benefits despite some early claims. The same thresholds and taxation rules still apply, meaning up to 85% of your benefits could still be taxable. Itemized deductions and charitable giving. So the itemized deductions get several updates. You probably heard about the SALT deduction cap. So the state and local tax SALT deduction cap rises to $40,000 in 2025, but phases down for incomes over $500,000 for single filers or $1 million for married filing jointly. This cap drops back to $10,000 in 2030 unless it's extended. Mortgage interest premiums are now permanently deductible again. There's a new 0.5% of adjusted gross income floor. So 0.5% of your adjusted gross income is a floor that will apply to charitable deductions starting in 2026. This means that small donations may no longer provide the tax benefit unless you exceed that floor. But here's a planning opportunity. If you're charitably inclined, consider bunching donations into 2025 to get ahead of this new floor. High-income taxpayers in the 37% tax bracket will now have their itemized deductions trimmed slightly. So that will be reducing their value from 37 cents per dollar to 35 cents. It's a small but potentially impactful change. Business owners and QBI. So QBI is the qualified business income deduction. So if you're a small business owner or a partner in a pass-through entity, so a sole proprietorship or partnership, the Section 199A qualified business income deduction continues mostly unchanged. However, the phase-out ranges increase, giving higher income earners a bit more room to claim the deduction. There's a new $400 minimum QBI deduction also introduced for those with at least $1,000 in active business income. It's a modest benefit, but it could be a useful one for small entrepreneurs. Also, for businesses, 100% bonus depreciation and an increased Section 179 expensing are back for business investments. This is useful for capital-heavy operations. Now, new deductions. So these are new below-the-line deductions. So 5 new deductions available even if you don't itemize. So first one is tips. Up to $25,000 of tip income is deductible for 2025 through 2028. and it's phased out for higher earners. There are specific jobs that this will apply to, and the list is intended to be available by October. Overtime pay. There will be a deduction for the extra pay from overtime, not the base pay, up to $25,000 for joint filers or $12,500 for single filers. Also, this is phased out over an income range. New deduction for auto loan interest, up to $10,000 per year in deductible interest for new vehicles assembled in the U.S. There are some nuances to this particular deduction, so you want to do some research before making it a purchase and assuming that it will definitely apply to you. Charity for non-itemizers. So there's a new deduction of up to $2,000 for joint filers for cash donations only. And again, this is available for non-itemizers. The age 65 and older deduction we mentioned already. This is a temporary deduction available through 2028. These are all designed to give more tax relief to working and middle-income Americans. But watch the income limits. They're going to matter a lot in planning. For retirement and savings enhancements that are in this bill, the new Trump account is a retirement savings vehicle for minors. With contributions up to $5,000 a year, even without earned income, these accounts must be invested in low-fee index funds and can't be tapped until age 18. Also, 529 plans now allow for a wider range of K-12 and vocational education expenses. That might mean CE credits for those of you who need them. And 529 to 529A or ABLE account rollovers are now permanently allowed. The estate tax exemption is now increased to $15 million per person beginning in 2026. This is welcome news for families with substantial estates. Here's where proactive planning becomes crucial. For other changes, such as changes regarding the alternative minimum tax or AMT, if you hold incentive stock options, consider exercising them in 2025 to avoid the tougher AMT environment that's coming in 2026. Tax treatment of charitable giving is more favorable in 2025, as we discussed, than it will be in 2026. Consider planning large clean energy purchases like solar panels or EVs before their credits expire. Some of them will expire at the end of 2025, some of them in the middle of 2026. But specifically, the credit for the electrical vehicles, they expire in October of 2025. Watch for those phase-outs. Again, as I mentioned before, nearly every new deduction has an income-based cutoff that can increase your effective tax rate if it's triggered. So, the OBBBA is massive. It extends, adjusts, or replaces provisions that impact nearly every household, and it introduces new complexity in areas ranging from itemized deductions to business income, education savings, and retirement planning. For most taxpayers, these changes won't be intuitive, but for those willing to put in the work or work with an advisor, this is a golden opportunity to create a proactive, tax-savvy roadmap, especially from 2025 through 2028. While many of these new deductions are actually in effect. In future episodes, we'll dig into some of these new provisions and how you can plan to effectively use your resources with regard to the tax code. Thanks for listening to this episode of Living Your Wealth Today and Tomorrow. This podcast is for educational and informational purposes only. It is not tax, legal, or investment advice. Seek guidance from your legal and financial professionals before acting. For more insights on planning for your financial future, follow me on LinkedIn. And for more information on Infinity Financial Strategies, visit our website at infinityfinancialstrategies.net. If you enjoyed the show, please share it with a friend or family member who might benefit from listening, and please leave a review wherever you listen. Tune in next time for more tips and tricks on living your best life through financial planning.